Hello everyone, this is Crystal with Slick Trade, and in this presentation I'm going to go over low-risk Nadex spreads. Now recently you've seen some spread signals from the Germany 30, okay? And I've had a couple people ask how to take those spreads, especially when there is not a contract for under or at or under a $20 risk, okay? With these spreads, I do something a little bit different, okay? So, as always, before we get started, please feel free to pause the disclaimer and read through the entire disclaimer, but when trading any financial asset, there's a possibility that you may sustain a partial or total loss of your investment funds. As a result, it is advised that you should never invest with or trade upon money which you cannot afford to lose. Trading involves a real risk of loss, and past performance does not ensure future results. Okay, if you're familiar with the Fultron, otherwise known as the follow the trend strategy, then you know its effectiveness in the Forex market with low risk, high reward potential. Not only is this strategy effective, it is also very simple. With the creation of the Fultron EA, you can simply let it run and receive signals 24/5. Okay? But did you know that you can also use this for Nadex spreads? Loading the Fultron. Here's a quick overview of the strategy and how to load up the EA, okay, if you're not familiar already with the Fultron. Or if you simply need a quick refresher. 1. Open any asset chart. 2. Load the Fultron template into your MetaTrader 4. And 3. Choose the inputs that you prefer. Now for Nadex, the only two inputs that you're going to want to choose is trading with the trend or trading with and against the trend. Okay. For the Germany 30, I trade with and against the trend. The strategy overview, okay, indicators that are used for this are the simple moving average 200, exponential moving averages 12 and 26, the slick trade follow the trend indicator, the candle moving average indicator, pivots monthly, SDX pivots, supply and demand, and the moving average of oscillator. Okay, that may sound like a lot of indicators. However, a few of those are simply used for an added confirmation that you want, to look at to know that you want to enter the trade or not. Okay, with the Nadex spreads, I don't really look at those so much. Okay, I look at a few indicators and a few indicators only. The strategy overview rules, okay? It's to open an hourly chart, okay, with the asset of your choice. 2, the 12 and 26 exponential moving averages cross to the upside or downside. When that occurs, the slick trade follow the trend indicator will place an arrow on that chart, okay? If you have the expert advisor running, it will send a signal every time that that arrow appears, okay? So that you know via email, pop-up, or text, SMS alert, that the EMAs have crossed. That is the main part of this strategy. You want to make sure that those EMAs have fully crossed before entering any of these trades, okay? 3, is price above or below the 200 simple moving average, okay? This will define whether you're with or against the overall trend. Now, in a ranging market, or a market that's in a consolidation period where it's kind of going above and below the 200 moving average, it's harder to define the trend, okay? So, but when there's an actual trend that's apparent, okay, that moving average is headed to the upside or headed to the downside, the trades are much more viable and easier to enter by going with the trend every single time. Okay. But again, you can always refer over to the actual strategy itself, okay? The full trend, follow the trend. I have a link to it right in the members area under the strategies, okay? This is simply an overview. For the previous Aussie flip, okay? Now, I let you guys know about this, I believe it was last week, that I like to look for that Aussie flip, and that's that moving average of oscillator when it becomes exhausted or it actually flips to the downside or to the upside from, if it flips to the upside from when it was previously in a short position, okay, or when it flips to the downside from when it was previously in a long position, okay, that's kind of what I'm looking at, okay. I explained that better in the actual strategy video. But that's just a good added confirmation. That's also a good added confirmation for the spreads, okay, the Nadex spreads. So look for that Aussie flip, just see. If you're going against the trend and that Aussie flip has occurred, I still go ahead and I enter it. Okay, whether it's with or against, it doesn't matter to me because we're doing these ones on a lower time frame. Okay. Number 5, supply and demand, is it corresponding? Okay, this is again for added confirmation. Is price down at a demand level? Okay, and has the cross occurred to the upside from there? If it has, go ahead and enter that trade. Okay, if it's up in a supply zone and price has moving averages across to the downside, enter that trade, okay? That's a good added confirmation, just like that Aussie flip, that, yeah, price is overbought or oversold. It's going to head in a different direction for a little bit, okay? Or for a long bit. You never know. It could be the actual reversal. But, again, just for added confirmation. Number 6, take the trade in the direction of the 12 and 26 EMA cross. Okay, so if it crosses to the downside, you're entering a short. Crossing to the upside, you're entering a long. On Nadex, crossing to the downside, you're entering a sell. Crossing to the upside, you're entering a buy. Okay. Number 7, you set your stop loss above or below previous support or resistance. Obviously, in Nadex, that rule will not apply. Okay. Number 8. TP, or take profit, is 25 pips, and then you trail stop for maximum profit. Okay, again, that will not really apply to Nadex. What I would do is I would take profit at a previous support or resistance level or a previous supply or demand zone. Okay. Using with Nadex spreads, what you're going to do, one huge difference from the follow the trend full trend original strategy is that instead of using the hourly chart, you're going to use a 15-minute chart. Okay, you can use any asset you'd like. Okay, spreads with Nadex, every pip that they move, you're gaining or losing $1. Okay, I personally like the Germany 30 or DAX. Okay. That is where those spread signals are coming from on Twitter. It's from this setup, okay? I trade with and I trade against the trend for this trading method. And I do like to see if the Aussie flip has occurred when going against the trend. Or I can also check the supply and demand zone. Okay, maybe an Aussie flip hasn't occurred, but price is up in that supply zone or down in the demand zone. Okay, just for added confirmation. Or you can just enter the trades either way. The worst thing that can occur is that you're going to have a buy signal and then a sell signal maybe an hour later, and now you're in 2 trades. Okay, but that's okay because the next part is on risk. Okay, the risk I take for these spreads is 50 per contract max. Okay, I don't enter any others. It's 50. There was one time I did enter a 60. Turned out absolutely fine. But my general rule of thumb is you're only going to enter those if they have a $50 max risk, okay? The difference from the original 24-hour spreads that I released is that that $50 max with the other 24-hour spreads, like the currency ones, like the GBP, JPY, Euro USD, GBP USD, those have a $20 max risk, okay? Otherwise, you don't enter them, okay? Because they can go heavily against you, and they only have a 30 to 50% win rate, which that is great, but that's great only with a low risk, okay? So these ones are a little bit different. They have a higher win rate, a much higher win rate. It's very close to 50%, and if you have opposing signals, a sell and a buy, you're only risking 50 on one side, technically, okay? One will ultimately lose. It will not reach any take profit level, but you can also sometimes take profit from both, okay? If you're sitting there watching the chart. I really don't. I usually just kind of let them go, and I have take profits set in place. I've seen where both have been hit. That's great. Another thing to note is if the risk is above 50 for the spreads with this setup, set a working order, okay? If it fills, it fills. If it doesn't, it doesn't. It's not a big ordeal. But I've seen 9 times out of 10, they reach that, okay? So, why the DAX? I enjoy trading the Germany 30 or DAX because of the number of pips that it moves in favor or against favor even. When price takes its overall direction, it goes deep in the money. That is what I like most about trading the DAX. You can use this method with any asset like I've already stated, but by using indices, price movement is very beneficial to the daily profit, okay? So if you want to trade the S&P 500, the Wall Street, FTSE, any of those, you can. I just personally, I've always loved the Germany 30. I don't know what it is. I like the way it moves. It works very well with the strategy. So, even if you have 2 open positions, like I said, opposing signals have been sent. You're in a buy and a sell. You have a max loss of 50 in one of them. Okay, the winning trade is going to bring in a much higher profit than the losing one. Okay, so normally these on the DAX, they move from what I've seen, okay, 50 to 100 pips, okay, simply because indices move differently than currencies, okay, so that price movement is great, all right, and many times, you know, that max loss of 50, it isn't actually 50. I get into those a lot where it's a 40 risk or a 30 risk. Or again, just set your working orders to what you're comfortable with. All right. If price does not really take any direction, then you can grab a small profit on each side, or a small loss on each side. If you know, if it's just kind of going back and forth. But normally you can break even or take a small profit if it's in kind of that consolidation period. Okay. What times? I take the daily spreads. I take them between 6 p.m. and 11 a.m. Anything after 11 a.m., I don't like to enter. And the reason for that is because there isn't a lot of afternoon volume. And sometimes, yes, there is, okay? But what I found is from 6 p.m. to 11 a.m., that's the best time to enter those dailies, okay? 6 p.m., the market has already closed. You know, the previous daily is done. And you may not have much movement during that time, but that's fine. You can let it go because it's gonna go until the next day at 4:15 p.m. Eastern. Okay. That's it. All right, now I'm going to show you some examples on my MetaTrader 4, and I hope you enjoyed this presentation. All right, so let's go ahead and bring this up. I'm going to do a new chart. going to go down here to Indices, and I'm going to go to the Dax. Okay. I'm going to switch to a 15-minute time frame. I'm going to go, I did right-click, template, and I'm going to load up the, right there, Fulltron. Oh, this isn't the updated one. Sorry about that. You would normally go to the Fulltron. This is the old one. I've been using it in my other MetaTrader 4. So let's see. I think follow the trend. Which one is it here? Just follow the trend. Ah, that's not the one I like though. Sorry about that, guys. Template. Let me just go ahead and save this real quick. Not a big ordeal. Save it as trend with pivots. Now it's going to have this on here. Alright, let's do a new chart. Sorry about that, I should have already had this up. 15-minute time frame, template. You're going to load up the Fulltron. There we go. Much better. Okay, so Friday. Friday was a ranging day. Okay, I didn't even enter a spread at all on Friday, and I don't really suggest it. Normally, that's when you're going to have kind of that back and forth movement. As you can see, there were multiple crosses, and oops, where am I at here? Right here. There were multiple crosses, and it really didn't take any specific direction. Okay, so if we take a look at, I believe it was March 3rd, I entered a couple trades. March 4th was Friday. Well, I guess it did end up having movement later on in the day. I didn't really look at it. You could have got some nice pips there. And as you can see, look at that. I'm going to show you that real quick. There would have been a sell, which didn't make any profit, really. But then you'd have the opposing buy, which, look at how far that went in the money. And that was for a Friday. Like I said, normally I don't trade it on Friday. Oops. Okay, so here, I had entered this one. I had entered the sell, and it gained a decent number of pips here. I think it was about 30 profit per contract or so. I think I grabbed on that trade. We didn't have an opposing signal that day at all, so that was nice. It's nice when it doesn't, when it just takes its overall trend and then you don't have a losing side at all. But you gained about, from where I entered, about 30 profit per contract. And as you can see, it kind of went down and then it came back up. So you had kind of multiple, I mean, you had so you had up to 2 hours to really enter this trade. Okay, added confirmation on this one. Look at this. You had an Aussie flip right here to the downside. See that? And here was where the signal was sent. Okay, so you already had that flip to the downside. Price was still kind of picking where it wanted to go. Then you had the signal to sell. Okay, you were going against the overall trend. As you can see, this moving average is headed in a buy or long. But again, it didn't stop you from grabbing some pips, and that was from the added confirmation, like I said, of the Aussie. Pretty simple. We did, okay, yeah, these signals were sent. The day before that. And, excuse me. Okay, I had entered the short right around here. Okay, it was after this one was already, this one had signaled overnight. I woke up to it, and then a little bit after I'd entered the sell, a long or buy position was signaled. Okay, so this was a day where there were two. Okay, I had entered the sell right around here, and I had entered the buy right around that same place. Okay, and my sell immediately went into profit. I had taken profit on that, but I had left my buy open. Okay, as you can see, a little bit later in the day, it started to head up. I pretty much, I think it was like a $5 loss per contract on the buy, and then I had gained, I want to say it was like 40 profit per contract on the sell. Okay, here is an example. Right here. Yeah. Okay, so this was a long position, or buy position that was signaled. It was above the overall, or the 200 moving average, so it was with the overall trend. So anytime that it's signaling with the trend, I take it no matter what, whether there's an Aussie flip or not, or a supply-demand zone that corresponds or not. Trading with the trend is always great. But with these, like I said, you can do both. Okay. Worst case scenario, you enter two, one loses, and the other one profits quite heavily. Okay. In this scenario, this was a very high profiting trade. Okay. And it was signaled overnight. So if you're wait for it, if you trade later in the evening, then this was a great one. Excuse me. Okay, this was kind of afternoon volume here, so no signals were issued here. As you can see, price kind of, it fluctuates. It really doesn't have a whole lot of movement. That's why I say, stop by 11 a.m. Eastern. Okay. Excuse me. Here was a good one right here for a short or sell position. Headed down. Yes, you were going against the overall trend. However, you had the previous Aussie flip to the downside over here. Okay. And again, bam, beautiful profit. Okay, and it may not look like much compared to like the currency pairs and stuff, but like I said, indices move a lot differently. Okay, they move more pips. Excuse me, and it just works out very well. If we see here, I'll show you two more maybe. This was on the 24th. This was in the morning on the 24th right here. Okay, so this one you had a previous Aussie flip to the upside, so going against the trend was okay. Right here you would have entered, and boom, beautiful. And excuse me, you had a sell position here, and then you had an opposing buy. So the sell, of course, would have lost and never gone into profit really, other than maybe a couple dollars. But if you entered the buy, again, this one was an overnight, and it was absolutely beautiful. You could have gained a lot of money on that trade. Okay, so that's the overall concept. You can use it, like I said, on any asset of your choosing. Make sure you have it set to that 15-minute time frame. And hopefully that helps to understand the Germany 30 signals, the spread signals that have been coming out for Nadex. Trade it between 6 p.m. and 11 a.m. for intraday trades. Okay, you can stay in them after 11 a.m., but only enter between 6 and 11. And if there isn't a 50 risk or less, then set a working order. If it fills, it fills. If it doesn't, it doesn't. Not a big ordeal. And set your take profits. Okay? Or if you're going to be watching the trade, then just watch the trade, and take profit when you feel comfortable. You guys have a great one, and I will talk to you later.